Well, as we've been talking about during our coverage here in Davos, one of the buzzwords of this World Economic Forum is polycrisis. Another, of course, is recession and the debate over whether we're going to have one. Joining us now is David Rubenstein. He is the co-chairman and co-founder of Carlyle. And of course, he is well poised to talk about this because you talk to a lot of people, you do a lot of deals, you talk to people not just as part of your job, but also as part of your job hosting and interviewing people. So you have a pretty diverse set of voices in your head, so to speak. How are you synthesizing all that? What's your feeling about what the economy is doing?
The press that has been written about Davos suggests that people here think that we're going into a recession for sure, and things are pretty gloomy. I don't really agree with that. The numbers that we have in our own companies at Carlisle don't suggest a recession is imminent. And we also think that the U.S. policy to get inflation down is probably working. And so I don't really think it's clear we're going to go into recession in the third or fourth quarter. It is clear that the Fed will increase interest rates again, probably in February and March, but not by so much so that will put us in a recession. I think the Fed will probably target inflation down to about 3%, not 2%. Their current public position is 2%. I suspect in time they'll go to 3%.
Do you think they'll be able to get it there?
I think they will by the end of 2023. I think they get it to 3.5%, yes. And I think that's tolerable. I mean, 2% is good. We had it for 25 years, but 3% is tolerable.
David, if we're not going to get a recession, is this a stagflationary environment? Still high inflation, slow growth, and what would that mean to the investing public?
Well, clearly, inflation will be bigger than it was last 25 years or so. So it's going to be lower growth than we probably had a couple years ago. But remember, an economy of our size, $24 trillion, it's hard to grow at 4 and 5 and 6%. So I suspect we'll probably grow at 3.5%. And I don't know if I would call that stagflation. It's a reasonable growth for the economy of our size.
We're coming off of obviously a pretty lousy year for markets. And I think a lot of people also are coming off a period where they were paying more attention to equity markets in particular during the pandemic when they were home. Going into 2023, if you're talking to somebody who's 25 or 45 for that matter, and they want to build their wealth, they want to think about retirement, what do you say to them? Is it a time to get into stocks? Is that the best strategy?
Of course, if somebody is 25 worried about their retirement, you have to say what kind of person is
this? Maybe not worried, but
okay.
they should, it's a good idea to think about it.
I guess what I would say is the best time to invest is when markets are depressed. And right now the markets are a little depressed. The stock market was down between 20 and 30%, depending on how you measure it last year. So I suspect that it's a pretty good time to invest. You never can time the bottom of the market exquisitely well or the top. But you should basically say, look, the economy has some problems. People are pulling money out of the market. That makes it cheaper, and therefore it's time to get in. So I think it's actually a good time to invest.
David, of course, you're a seasoned, experienced investor, but throughout the COVID pandemic, we've had a lot of new investors come into this market, meme investors, whatever you want to call it, a lot of new retail investors. How do they go upon improving their financial literacy and picking good stocks to own?
Well, you can't read too much, so I think people should try to read more about what they're investing in. Very often they might hear a stock tip from a friend, all of a sudden they're buying the stock. They should read about it, learn more, and don't rush to do something. But there's nothing more important than reading, knowing what you're investing in, and making certain you keep current with it. And I tell people in a book I recently wrote about investing that you have to really know what you're doing before you give your money to somebody.
I also want to talk to you about the outlook for M&A, since that is your business. We earlier talked to Paul Knopp of KPMG, where he said, particularly in the second half of the year, we might see more of an uptick in deals. What's your view?
Well, hopefully it'll be better in the second half than probably the first half. The first half is still going to reflect a little bit of what we saw in the last half of 2022. Right now, this is the phenomenon you have. It's harder to borrow money, for sure, but that isn't the biggest problem because a lot of deals don't need money. You have growth capital, venture capital. The real problem is people who see the economy right now, they think the economy is going to come back and they don't want to sell at a lower price. And the sellers or the buyers are saying, wait a second, we're going to recession, so you should sell at a lower price. So there's a big gap of, I would say, 20 to 25% between buyer and seller expectations. And that's the biggest problem we have right now.
What's your go-to tool that you use to size up a deal and ultimately know when to pull the trigger?
Well, at a firm like Carlyle, you have gigantic investment committee memos. So typically, if you're going to do a deal, you'll have a 30, 40, 50-page memo, which you could argue that Warren Buffett doesn't use 30 and 40 and 50-page memos. But reading that memo and making sure you talk to the people who've done a lot of the due diligence is probably the best thing to do. For those people who don't have deal teams of the size of Carlyle, they obviously have to read material and make sure they know something about what they're investing in.
I want to talk to you a little bit about Carlyle and the whole succession discussion at the firm. There have been a lot of rumors about the Citigroup CFO potentially, about a former Morgan Stanley executive, about different people who might come in to run it. How are you guys thinking about it right now? Where are you in the process?
I don't really think I can comment on that because I've been trained by my lawyers that I will go to jail if I say something. So what is your next question?
Where would you like to see Carlisle a decade from now?
Well, the greatest private equity firm that's ever existed. That's what I'd like people to say, but I have to be realistic about it. A decade is not that long a period of time to really build a firm to that level. I think it's one of the biggest and one of the most successful private equity firms in the world. There are probably 20,000 private equity firms. It's one of the most successful. But sure, I'd like it to continue to be active and well regarded. And people think that if you work there, you're going to get a good job and good training. And if you invest there, you're going to get a good return.
By what metric? If it's the best private equity firm in the world, how do you measure that?
Well, it's one that my children would say they're proud that their father started, I guess. And if my mother was still alive, she would call me and say, hey, you really did a good job. So, but in terms of the metrics, you want people around the investment community to say this is a firm that people should work at. It's a great place to work at. It's a place where you should invest your money. No perfect metric, but those are the ones I use.
Dave, before we let you go, big fan of what you do interview-wise, and you wear a lot of hats like Julie mentioned. What makes you tick?
Well, I came from very modest circumstances. I'm trying to give back to the country and try to say, look, people from modest circumstances, they work hard, they can achieve things in life. And I'm motivated by, trying to please what my parents wanted me to be, which is something useful with my life. So, the country's been great to me, and so I want to give back to the country, and that really motivates me.
I'm sure that your mother would be very proud. I think.
Well, I hope so. But she lived to see a lot of what I've done. But I think she was happy. But I think she never is happy as when Carlisle bought Dunkin' Donuts, and I gave her free Dunkin' Donuts coffee passes, and she would go into Dunkin' Donuts place and say, my son owns Dunkin' Donuts, and the person would roll their eyes and say, sure. But she would give them a little pass, and she'd get free coffee. She was happy about that.
That is fantastic.
Awesome.
Thanks so much, David. David Rubenstein
Bye.
of the Carlyle Group. Thank you.